So hi everyone, I'm Jonathan Carter. Today we're doing just a very quick webinar about preparing for personal tax season. Please excuse me if I look off to the side from time to time. That's where my second monitor is. So I'm the founder of CATA Accounting Solutions. We were founded in 2014 and have been in business since then. I was a member of Intuit's inaugural Accountants Council. That was a group of accountants and bookkeepers who helped Intuit develop their product and improve their product for the Canadian market. I do have a long-standing relationship with them. We are Elite Pro Advisors, QBO Advanced Certified, and we were named to the top 100 pro advisors in the world in 21 and 22. In 2018, I was also awarded the Inspire Accountant Award for contributions to the future of the industry. And we are considered trusted advisors for several cloud bookkeeping firms, and we really like to work with forward-thinking people and companies. Just a couple quick things about CATA Accounting. We're not your typical firm. We don't do in-person meetings. We don't have a brick and mortar office. We do not accept paper. These are really strange things for most accounting firms. So just to quickly go over the agenda today, we're going to go, of course, over the deadlines. It's the most important thing. Everyone needs to know the deadlines. We're going to talk a bit about tax installments, keeping and staying organized. And then we're going to revisit the typical things that are pretty much consistent year over year over year. And then we're going to talk about what's new for 2022, what to watch for in 2023. And then we're going to have an Ask Me Anything. So just as a qualification, answers are not guaranteed. I'm not going to speak about anybody's individual tax situation. And if I don't know an answer, I'm not going to make it up. I'm going to tell you I don't know the answer and we'll need to circle back. So just as a reminder, I do know there are several CPAs and bookkeepers on this call. This is intended for the average taxpayer, so it's not going to get into too much detail. So deadlines. RSP contribution deadline is the one that's imminent. It's February 28th. Get those RSP contributions in. If you've not already registered for CRA My Account, do it. There is still time to get fully registered before the deadline. You can look on the CRA portal to find things like your RSP contribution room, your TFSA contribution room, your notices of assessment. If there's any amounts owing to you, any expected credits or payments coming, you can even check if there's any uncashed checks on your account. So as a reminder, tax payments are due April 30th. This is a Sunday this year. So that will be May 1st. CRA will consider anything postmarked up to May 2nd as on time. However, I would highly recommend just get it done. Get it done. Make sure that you get your taxes paid on time. This is all personal taxes, including self-employed. We often see self-employed people get confused because they do have a later tax filing deadline. And then they end up with penalty and interest because they didn't actually pay their taxes. So if there's a chance you could file late, you can always pay an estimate. And then when you file your taxes, if there's money owing back to you, you'll get that refunded. And if you owe more money, the penalties and interest will be less because you paid a significant portion up front. So the filing deadlines are April 30th or May 1st for most people. And for self-employed and the spouses of the self-employed, that's June 15th. And that would also include the HST deadline for those self-employed people on annual filing. If you're on a quarterly filing, your deadlines are different. Just a heads up, we did get burned by this in the past. I wouldn't recommend filing before March 31st, as that's when some slips are due, specifically T3s from trust accounts that have a December 31st year end. I won't get into too much detail on that. Most of the banks will have provided them by the end of February, no problem. But there is that possibility of a slip coming in, say March 31st, and it doesn't get to you until like April 5th or something like that. So I would just keep an eye on that. Know your situation. We're going to go into that a bit more in a moment. So tax installments. If you owe more than $3,000, you are required to pay tax installments. Check your tax return, your letter from accountant from the prior year. The due dates are March 15th, June 15th, September 15th, and December 15th. You will get installment interest if you fail to pay your installments. That is something people are sometimes surprised about. Make sure you read that letter. Make sure you understand what you need to pay and make sure those installments are paid on time. All right, so that's just a couple comments about keeping organized. Strongly recommend keep all your information in one place and back it up. If you're using a hard drive on your computer, make sure you back that up on a regular basis. If you're using a filing cabinet, probably a good idea to get those items scanned in just in case, there's a flood, there's a fire, God forbid, there's damage and you lose those records. If those are your only copy, those are your only copy. And it is the taxpayer's responsibility to be able to provide evidence should CRA require it. Try and stay informed and keep up to date on what's coming or what's going on in the news. News is a good one. CRA will make announcements when things become official. Politicians will often make announcements too early in the game, so things aren't real yet. They have not received royal assent. They are not law. So sometimes when that happens, you have to kind of take it with a grain of salt and keep your eye on it moving forward. Speak to your accountant, check blogs, check newsletters, use reputable sources. One thing that we pride ourselves on is speaking English and not Accountanese. So if I do speak Accountanese, you need clarification on something, call me on it because it does happen. I've already mentioned registering for CRA My Account. Can't emphasize this enough. Lots of great possibilities of things you can do there. If you need to do bookkeeping, if you are self-employed, chop it up into smaller pieces. There's nothing worse than like getting to the Christmas holidays and it's like my holidays are ruined because I have to spend all my time doing my annual bookkeeping. Ideally, you're doing it on a monthly basis, but at the least do it quarterly. As a family, we're doing our bookkeeping quarterly. Don't let hesitancy about doing your bookkeeping prevent you from filing on time. It's one of the easiest ways to pay more than you deserve to pay is by filing late because you didn't have things in order. We do have a template that can help with simple bookkeeping and also help you get organized for your personal taxes with everything from, childcare costs to work from home expenses. The template covers a lot and there's a video right in the template. So if you want that, please reach out to us and we can send that to you for free. So it is your money, it is your right, and more importantly, it's your responsibility. If you don't mind your money, somebody else is going to. So in Canada, it's the taxpayer's responsibility to keep good records. Don't miss out on opportunities by not being informed. And don't get caught in the trap of scrambling at the last minute. I think everybody here is avoiding that just by being here and starting to think about it and start to get things organized. There's still a lot of time. So you do deserve answers. It is your money. It is your right. Banks often will make suggestions that could be construed as tax advice. Never take tax advice from a bank. They are a bank. Their job is to be custodians of your money and your investments and to sell you product. So we have seen many situations where an individual taxpayer takes tax advice from a bank, resulting in damages to the taxpayer, but the bank doesn't know what the other bank has going on. So let's say, you have lots of TFSA room with that bank, but they don't know if you have a TFSA with another bank or something like that. Leverage your registered accounts. RSP and TFSA are classics. They're really good. We're not going to talk about them in detail. We have blogs about them. The first time home savings account is very exciting. That's something we're going to talk about a bit. The other mistake that we commonly see is people will put money into these programs and do nothing with it. We recently did a post, it's a bit of a clickbait title, Saving is for Losers. If you're saving money in a low or no interest account, you are losing buying power against inflation. It is more important now than ever to make sure that your TFSA and your RSP, those monies are invested. Okay. So again, just a quick comment about CRA My Account, register, make sure your address is up to date, make sure your direct deposit is set up so you can get your money quickly, and check if there's any uncashed checks. Even as an accountant, when I did this back in I think it was in 2014, I actually found a handful of uncashed GST credit checks. So let's talk about the typical stuff. Medical expenses, this is one that we get all the time. I really think there's room for improvement in this realm by the government. It's a 15% non-refundable tax credit on the amounts over 3% of your income or $2,479, whichever is less. So let's say you spend $2,480 and that's more than 3% of your income. You're going to get 15 cents back. It's not a great one. It is worth understanding and knowing if there's a potential claim there, but don't expect it to be huge. And if you've got health insurance, you're not suffering a lot of out-of-pocket costs, then it might not be worth your time. That's a judgment call you have to make. Charitable and political donations. Political donations have a very high impact on your credits, but both must have valid tax receipts to be counted. If you bought groceries and you donated them to the food bank, that is not a charitable donation. That's just giving for giving's sake. So if that is something that you want to do, like give to the local food bank, they need money too. So you can always cut them a check and they will cut you a tax receipt. So some of the standard benefits and credits, the Canada Worker Benefit, that's for employees who get T4 income, making over $30,000 a year. That's where it maxes out. The climate action incentive payments, that's been in the news a lot. They bounced around how that's handled, but I think we finally landed on one system now where those will come similar to the GST, HST credits quarterly starting in July. And finally is the child care benefit payments. That's another thing to keep in mind with regards to potential benefits you could have from filing your tax return. So a bit more of the typical stuff. There's a home buyer's credit. It did increase this year. We'll talk about that when we get there. There's a home accessibility credit that also increased this year. That is for the elderly, the disabled, things to make your home more accessible. Adoption expenses, digital news subscription, legal expenses in some situations. Legal expenses are not always deductible. It has to be very specific situations. Moving expenses, glad they brought that back. Disability tax credit, that's something that we often see where there's an opportunity that's not being taken. Sometimes the doctor needs prodding to file that form with the CRA. The CRA has made it very easy for them. It's all done online through their office. The tuition, education, and textbook amounts, that comes from T2202A. That's a slip that you would get from an accredited college or university, outlining the tuition you paid, number of months enrolled full-time, part-time, and the rest is just automatically calculated. And of course, work from home expenses. If you are an employee and you do not receive a T2200, you do not get to claim work from home expenses. Now is a good time to speak to your HR department if you feel that you should claim it. It is important to note that it requires you to work from home more than 50% of the time. I have seen claims where the employer said 50% of the time and the claims were denied. So it's very important to make sure that's more than 50% of the time. And even more of the typical stuff, investment expenses. This is something we also see missed a lot. If you have T3, T5, or T5008 income, T3 is from trusts, T5 is from investments. So like, you get dividends from a stock or something like that. And T5008 is from stock trades. There could be other slips in there. I'm not mentioning every single slip, but these are some of the things that you might be able to deduct. Your advisor's fees, your transaction fees, your accounting fees. And if you've borrowed money to invest, you can write off that interest as well. Something that's been going on for a while that we have seen people fail to do is to report real estate sales. All real estate sales need to be reported as part of Schedule 3 on your personal tax return. So make sure that you are disclosing with your accountant or you're completing that schedule if you're DIYing it. And of course, childcare expenses. So, excuse me. So let's get into what's new for 2022. Tax brackets have gone up overall. That means for the same amount of income, you're going to pay less tax. COVID benefit repayments, those letters have gone out and are continuing to go out. If you shouldn't have gotten the benefits, you're going to be asked to repay them. So watch for those CRA letters, open them and address them right away. It's not something you want to let hanging around and end up paying back more than what you deserve to pay. Tax credits, we have the increased first-time home buyers tax credit. It's a 33% increase, so that's really nice to see. And we also have the educator school supply tax credit up 25%, or up to 25% on $1,000. That has come and gone, and it's nice to see that one available again. Also, we have provincial tax credits, such as the Ontario Staycation Tax Credit. I know I've been informed there's a similar program in New Brunswick, but it depends on your province. So keep an eye out on your local provincial news. We are based in Ontario, so we tend to be a little Ontario-centric. So what's coming in 2023? The first thing that I'm most excited about is the first-time home savings account. So this acts like a cross between an RSP and a TFSA. Anything invested in the first-time home savings account is anything invested, all those investment earnings are tax-free. When you contribute like an RSP, it comes off the top of your income. So this is very exciting for people who've not bought a home. If any of you out there have children or grandchildren or whatnot, have the conversation. It's okay to talk about money. This provides a great opportunity. Between the home buyers plan through the RSPs and between this new account, over 5 years, someone could come up with $75,000 towards the purchase of their first home, assuming they earned nothing in the first-time home savings account, which of course is not the objective. Remember, don't just contribute, invest those contributions. So it is $8,000 a year for up to 5 years. It has to be used within 15 years of opening or before you turn 71 and you're required to start taking your RSPs. It can be rolled into an RSP if there's an unused balance. So let's say, a younger person, they're investing in this, they're doing really well, they've saved that money up, but then God forbid a parent dies, they take over the family home, they decide that's where they're going to live. Well, now they own a home, so they're not eligible to use the first-time home savings account to buy a home. They can roll it into their RSP. When it rolls into the RSP, it does not affect their contribution rate limits. So that means it's like kind of a bonus RRSP contribution. I think it's a very interestingly designed plan, and I really hope to see a lot of people taking advantage of it in the future. And I'm looking forward to seeing those tax flips in 2024's tax season. Another big thing for 2023 is the Canada Dental Benefit. This is for families with children under 12 who have a combined family net income of less than $90,000 and no access to health insurance coverage. So this is quite niche. It is intended to support lower income families. It's crazy to think that we think $90,000 is a lower income family, but in today's day and age, that's kind of the direction it's going. In order to receive the benefit, the family, all members of the family, must have filed their 2021 tax return. All right, some more for 2023. Increased TFSA room. It is pegged to inflation, and then they round to the nearest 500. So this year it's going up $500. That's to $6,500 for 2023. I believe that means if you've been 18, as long as this program has existed, your contribution room in total, I believe, is $88,000. I would have to double check that. There's an increased RSP cap. So you can contribute a percentage of your income up to a cap. That cap is increased 5.4%. So that's really nice to see for those high income earners. They can actually get more into RSP. And then the nicest thing is probably less tax for everyone. We have a higher basic personal amount, 8.6% increase for 2023. Higher tax brackets across the board, 8% plus for each tax bracket. So that's really nice to see. That means that for the same amount of income, you're going to pay less tax. Finally, and this is a little bit of the bad news, there will be increased CPP contributions, which means less take-home pay. On your pay stub, you're going to see, you've probably already seen on your first pay stub that it's less than what it was if you're making the same as you were last year, because the employer is supposed to deduct a higher amount of CPP and remit that to the CRA. In addition, that means the cost of employing somebody has gone up because the employer has to match that payment. And the cap has gone up as well. So it is roughly a 7.2% increase. So thanks very much, everybody. Please, if you are interested in working with CAT accounting for your taxes, please sign up to our priority list. This is the URL. I don't think we're distributing the slides. So, you can always go to our contact page and just check us out through there. There's lots of ways to get in touch. Love if you would follow us on the social media channels. We have 4 now, and we are starting to develop our YouTube channel as well. So, are there any questions?
Wow, thank you, Jonathan. If there are any questions, please raise your hand.
Yes, Yogesh Kumar, would you mind unmuting yourself so you can ask your question?
Okay, can you hear now?
Yep.
Yeah. So, see, my question is that this month I'm selling my house and I'm moving to a condo. So the house which I'm selling is like my primary home.
Yeah.
So I hope that there's no tax implication to moving to the condo.
It has to be reported on Schedule 3 of your 2023 income tax return. However, if it was your principal residence for the entire time you owned it, there's no capital gains tax.
Yes, the entire time I stayed at the same place.
Yeah.
Now, one more question.
Yep.
So this my house, my daughter and son-in-law, they're buying.
From you.
So as far as the, what you call land transfer tax or anything, so irrespective of the price you sell, you have to pay the land transfer tax at the current market value. Is it correct?
Yes, that is correct. And if it is an arm's length transaction between immediate family members, there could be other considerations that need to be taken into account. I don't really want to get into detail on your specific situation, but in a perfect world, it would be at market rate, and then CRA has nothing they can say about it.
Okay, so whatever the market price, you pay the, what you call the property.
Yes. So the land transfer tax is payable to the province based upon the market rate. Yeah. Sorry, Yogesh, I think you've kind of chopped up there. I think your internet is suffering a bit. Lance, I see you have your hand up. Nice to see you, Lance.
Hey, Jonathan, good to see you as well. I hope you're doing well. First of all, thanks very much for the presentation. It was great. A lot of information in there, and there was some information that was new to me. And I think you just said you weren't going to be handing out these slides. Is there, and this question might be a bit overwhelming, but is there a place that we can find out, kind of get our tax questions answered, or find out a little bit more about potentially things that maybe we're missing out on for tax credits? Can we find that information somewhere?
There's lots of good sources. So one would be, for sure, I would direct you to our blog. We do have a blog coming out tomorrow specifically about this subject. But again, it's a blog, right? So we can't talk about the entire tax code. Keep an eye on the news. The major ones are being discussed left, right, and center. Lance, you're a client of CATA. Feel free to reach out to us. And of course, we can have those conversations as well. So
thanks, Jonathan.
Yeah, of course, of course. There any more questions?
Yes, we have a question. Well, we have about 2 questions from Sue.
Okay, hi Sue, nice to see you.
I don't know, Sue, if you want to hop on, if you want to mute yourself, or if you're comfortable with the chat.
Hi, Jonathan. Nice to see you again.
Yeah, you too. It's
Long
been
time no
years.
see.
Yeah,
Yeah.
what, 4 or 5 years?
Yeah, a couple anyway.
Yeah.
Yeah, for sure. So I have these couple of questions here that I threw into the chat. First of all, I was wondering how much you charge for business tax returns and for personal tax returns for preparing them.
So we have a pretty aggressive early bird special. People who are on this call are probably already getting organized. I'd recommend you take that. That is 25% off if you get all your materials to us by the end of March. I mean, of course, we're going to make an exception for T3s that show up on April 5th, things like that. But for basic personal tax returns, we start at $165, but that goes up depending on, you know, if you have self-employment income, that would be another $165. If you have an HST return, that'd be another $50. If you have a rental property, that would be another $165, things along those lines. That's why I really encourage people to take advantage of the savings opportunities we give, the early bird special. And then we also have another with our template. If you use that and you provide all your information through that template, we charge significantly less for the rental properties and the self-employment and stuff because you're organizing all the
Okay, great.
information.
Yeah, I
for
requested
us.
that actually from
Yeah.
Julia, so she's send
Awesome.
that over to me.
Now, Sue, were you talking about personal taxes like self-employed taxes, or were you talking about corporate?
Well, both.
Okay. Well, we have your email. If it's okay with you, I'm going to shoot you both the corporate tax pricing and the personal tax pricing email.
Oh, that would be great. Yeah.
And then it's all spelled out there for you. Okay.
Okay, that would be great. And piggybacking off the other gentleman's question about rental property, I lived in my own condo for 3 years, and then my father passed away and I inherited my growing up home. So I moved into my home, my parents' home, but I kept the condo and I rented it out for a number of years. Because I lived in it originally, do I have to pay capital gains tax on it now? I sold it in December 2021.
Oh, okay. So there's a couple things at play here. The first thing is there's an election that should be filed when you're changing the use of a property from business to personal or personal to business. So in this situation, that election should have been filed when you moved out of the
Oh,
condo.
no,
and
it wasn't
started-
personal to business. It was personal to personal. So, oh, I see what you mean. As a business, when I rented it
Yeah,
out.
you
to
rented
others.
it out. That's
Okay,
business. Yeah. So there's that part. And then the capital gains are prorated based on the number of years it was your principal residence. So essentially,
Oh,
like,
okay.
if 1/10 of the time it was rented out, you're going to pay capital gains on 1/10 of the capital gain.
Okay.
Yogesh, you got your hand up again. Let's take you off mute, please.
Thanks,
You're on mute.
Jonathan.
Oh, anytime. Sue. Really nice to see you.
Nice to see you too.
Yogesh, you're on mute. I can't hear you. No one. There we are.
Yeah. So see, my current home, I've got a solar roof, which I'm generating income.
Mhm.
So because of this initial project, I was registered for GST.
Mhm.
So I'm filing the GST return for that income, and I'm transmitting. So now, as I'm selling my house to my daughter, now my GST account will be closed automatically, or you have to inform them.
No, you do have to inform them, and if your daughter is going to make GST off of this, then she's going to need to register and start filing the GST returns.
Like I will advise her not to register because it's like unnecessary paperwork.
Is it under the
so
$30,000?
whoever, yeah, it's like just $2,000 a year.
Okay, all right.
So I can just tell this solar, what you call this, Electra to deduct the GST and send them directly.
Yeah, I mean, if you're being paid a GST, then you have to report and remit that GST to the government.
Yeah,
so
but
I will. My
daughter, I will just tell them. Yeah, I will tell my daughter to not to sort of tell them to pay directly GST.
I'm not quite
like
sure.
me, like I made a mistake.
I'm not quite sure I fully understand the situation, but I'm happy to talk about it further a little bit later.
Okay, like let me
It would
explain
be
to
a
you in
good
detail.
conversation with your daughter as well, I think.
Yeah. See what happened that when I did this project, the project cost was 25,000 plus GST.
Yep.
So when I registered for GST, the government paid me the GST, which was like $3,500.
Yep.
Now, if I would have not registered for GST, then this problem would have not arise. So now, as I was registered for GST, so this Electra is paying me whatever electricity generation, they're paying me including GST. So they're not deducting GST.
Yes, this is correct.
Now, if I would have tell them, no, deduct the GST and send you, then this problem would have not arose.
I don't know how much of a problem it is. I mean, you're paying the GST like you should. You wouldn't have
Yeah.
a rebate if you had not registered when you did the project. So I'm not
Yes.
entirely sure. Like I said, Yogesh, I think this is a good conversation that really needs to be three-way.
Yeah.
It needs to include yourself,
Okay.
your daughter, and myself as well,
Yes, sure.
as far as how
Sure.
to move forward. But your GST account will not be automatically closed. Once you've sold the property, you'll have to
So we
call
have to
them and
inform
close it.
them.
Yeah.
Okay, okay. Thank you so much. So now preparing the account, so once all the documents are ready, we can sort of send you electronically, or how does it work?
Yep, we'll prepare and we'll send out engagement letters, and
Okay.
we'll have a folder ready for you to go, and you'll just
Okay.
upload stuff there, answer
Yeah.
the questionnaires, things like that, and
Yeah.
our team will handle it.
So me and my wife both we like
Yeah.
you to submit our returns.
I think we have you on the priority list, so awesome.
Okay.
Thanks.
Thank you so much.
No problem. Lance, you had another
Okay.
question, I believe.
Yeah, real quick, Jonathan, I just thought of something. So as it pertains to costs for health, I received obviously some benefits this year. Didn't cover everything, but it covered some of the stuff. How does that work? Like, where would I find the amount of money that I received back in benefits? Because obviously I'm not going to claim for every single health expense when some of it would have been covered. Can you give me some insight into that, please?
Sure. Usually it's provided by the benefits provider. So like, for instance, we're with Manulife. So Manulife will send us a year-end statement saying, these are all the things you applied for. These are the amounts you paid. This was your net out of pocket. Now, because CATA has benefits, we're not bothering to tally them up. It's not going to be enough for us to claim this year.
Okay. Yeah. So for me, it probably still will be, just given one of the health things that I pay for is a pretty substantial expense, and it's not,
Yeah.
the benefits don't cover it entirely. So
Mhm.
yeah, that's good. We hadn't received that from Manulife yet, so I wasn't sure how that worked. So I'll
You might have to self-serve it through their portal or something like that if you're signed up for electronic. Yeah,
Yeah, I'll do that. Thanks, Jonathan. Appreciate it.
no problem. Linda, how can we help?
Well, I think I'm on your priority list, so I'm just wondering when
You are.
the information would come about, because this is all new to me, doing it electronically. And I've done my own the last 3 years for a variety of reasons, including COVID. So when would that information come as to how we're supposed to upload what, where, and how?
That will come through our communications. The first communication you're going to get is an introducing the team email with a button that leads to the engagement letter. Once you sign that engagement letter, Neri will create a folder for you and share that with the email we have on file. If you request access from another email address, our policy is to ask the person directly before we provide access, because it's very easy to make up a new email address and get into somebody's records, and it's just part of our information security policies. But then everything is drag and drop, upload to Google Drive. You'll be sent a direct link. So you just click that link and then drag from one folder onto
And the
Google Drive.
timing for the initial email?
So the initial email will be coming out in Neri, I believe we decided it was going to come out at the end of the month, correct?
Okay,
On the 20th. Yeah, I'm seeing
just
the
so
nods.
I have it.
I
Yeah,
think it's
that's great.
27th. It's the last Monday in February.
Okay,
Because what we want to do is we want to get the ball rolling. We want to start collecting that information.
Yeah.
And where possible, we want to prepare the tax return in advance. Just have everything sitting ready to go. And then we do that last check in that first week of April for any additional T3s.
Yeah,
And if
because there
not,
will
then
be
it's coming
probably.
for signature. Yeah.
Okay. And I may have to change my email address because I think my Google account is not on this address, but that's another issue.
That's okay. If you have an alternate address, you can always email from the address we have on file and say, hey, this is also my email address. And then we'll capture that in our records and we'll provide access to that email. It is definitely easier to work with a Gmail address to use.
Yeah, and I have one. I don't use it much, but it exists and it's valid. So,
Yeah.
okay,
Excellent.
thank you.
My pleasure. Any more questions? I hope the CPAs on this have found this useful. I was kind of interested to see so many accountants and bookkeepers sign up for it. Thank you very much for starters. But I also hope that you found it a bit useful. I think it might have been a bit elementary for you all, but thank you for coming.
Thank you so much, Jonathan, for your presentation and answering the questions. I look forward to putting out this video to the CATA community. There's so much of value in what you provided. My email address is on the meeting chat. Should you want a copy of the template, if you want to double check if your name is on the priority list, if you have any questions at all, please let me know. And I will make sure that that is gotten to you. And thank you all so much for coming today.
Last call for questions. Anybody?
Last call for questions.
Thanks, guys. Great presentation.
Thanks, Sue. All right. Well, if there are no other questions, Julia, have you captured everything you need to from the chat?
Yes, I'm just going to put my email address just once more, just in the event. I have seen some emails come in asking for the template. I just want to make sure that the opportunity is there for anyone who wants the template or wants to double check any information. We did have a question about resume being sent in. So all our open positions are on our website. And should you not find a position that suits your need, feel free to send me your resume to my email address as well, which is on the chat.
Linda, did you have an additional question or is your hand just up from before? Oh, it's down now. Oh,
Sorry, I sort of thought it would go down automatically. I don't use that feature on Zoom very often. Sorry.
no worries, no worries. It does eventually go down. But yeah.
Okay,
All right,
that's
all right.
wonderful. Yep, I've gotten a few more email addresses. I trust that the rest will come through on the email address that I provided you.
All right. Thank you very much for joining, everyone. Really appreciate you taking the time during lunch to come and visit us. Oh,
Thank you.
hi, is that Michael? Hey, Michael. Thanks, Michael. I appreciate that. Yeah, good to see you, and hope you have a good season as well. Oh, hi, Mary. I see Mary's coming on camera.
Hi, Jonathan.
Hi. Sorry I couldn't take your call earlier. I was in a meeting.
I know. Now I know. Thank you for the presentation. It was great. Thank you.
Good. All right. Well, if there's nothing else, I'm going to close this down. We will be posting the recording eventually on our YouTube channel, and we'll share that link through our social media. All right.
Hi, Julia. Good to meet you.
A pleasure meeting you.
All right. I'm going to shut down. Thanks, everybody. Take care.
Thank you. Bye.
Bye.